Hey guys, Boris from BK. Please note the following video is for educational purposes only. No claim is made as to the accuracy or efficacy of any trading strategies in this video. And as always, do your own research. So I want to conclude the 25 lesson Scalping University series this week with the idea of when you trade them versus when you fade them. I will be doing more videos, by the way. I just want to let you know that, of course, I'll be doing videos continuously on a weekly basis, but I think I'm going to bring this particular series, the Scalping University series, to an end because we've kind of discussed all of the critical aspects of my strategy. And perhaps what I'm going to do next is put together all of the best of rules into a specific video that I'll put out next week. But for this week, I want to conclude the whole series by discussing the idea of when you trade them, when you fade them. And to that end, I kind of want to go back to what it is that I do on a day-to-day basis, on an intraday flow basis. For those of you who follow me at Twitter at FXFlow, you know exactly what I do. But the idea here is basically I always try to trade the critical quarter levels, that is to the 00 or to the 50 level in both the pound and the euro, off of a fundamental trigger. The thing that I kind of want to emphasize at this point is that I like to trade to those levels, but not through those levels. And within that idea, I think you can understand the kernel of when you can possibly fade the move versus trade the move. So to explain a little further, I've showed you here the pound dollar two days ago, and you can see that the 62 level, the 2 level, actually acts as a point of resistance on the chart, and the 50 level acts as a point of support. So in this particular case, this is UK retail sales Thursday night. Negative news for the pound, generally broadly negative pieces for the pound. But as you can see, the best trades are made to the 50 level, and the 50 level acts as a support. Similarly, the 00 level at 6,200 acts as a resistance, which is why when there is momentum trades, I like to trade to those levels. But if I'm going to fade for some reason, if let's say I feel that a move is overdone, my best probability fade is always going to be against the 00 level or the 50 level. So hopefully you guys can understand that a little bit more, but let me show you specifically what happened here. So this is my trades 2 days ago, pound dollar against the very weak UK retail sales. The numbers dropped to the 6,200, and here I short the 75s to the 50, 75s to the 50 again, and then 75s to the 50 again, 3 times continuously on the pound, as I'm just basically able to just churn over. Very nice plays. Note, however, that I refuse to trade through the 50 level because this is a much lower probability trade as it acts as a strong support. If I was really smart, I probably should have shorted the 6,200 level because the news of the day was essentially all negative, and the pound obviously turned itself around as the day progressed. But I was just too busy. One of the biggest problems I've been having recently is that I'm so busy during the North American session with other stuff that, as you can see, I'm really basically only trading the European session as I go through. I don't have the opportunity to do that. I want to show you similar kind of ideas in the euro on Friday to give you an understanding of the to versus through, when you want to go with momentum and when you want to try to fade it. So here's the euro Friday morning, and I think this is kind of an interesting idea. We start out. This is before the iPhone number, and I think this is the downgrade of Portugal. The downgrade of Portugal occurs, right? And I sell the 75s into the 50 level, and as you can see, that works very well on the news. Then IFO comes out. Now here's the interesting thing about the IFO. The IFO survey basically was stronger than expected. But as you can see, the price goes up, and then it cannot hold the 50 level. Does not hold the 50 level. To me, that certainly becomes a very ominous development. It basically tells me that the euro does not have a lot of positive juice. That the fundamental data is not supportive enough. So when it breaks the 50 level, I actually short. But here's the critical thing: I short for a much shorter amount duration because I understand the 50 level can act very much as support. I'm not. If this was 75 to 50, I would have probably taken my full plus 20 points. But here I take a very small amount, and I'm able to get out of the trade profitably. I go the second time, and this is a kind of an interesting example of why it's dangerous to trade through the 50 or the 00 levels. I go the second time, and this is post IFO. It tests the 50, but I get stuffed out. You see, it's just acts as a very, very strong support. The third time, the 50 level breaks in the North American session, but I wait because remember, to me, the much more highly probable trade is the run to the 00s, because once the 50 is given, then I think we have much more negative potential to the downside. And I actually short the 25s. It comes in all the way down to the 15s, rallies back out, comes back down again to the 15s. At this point, I see that it's just not really coming through the 00 level. I cover, which is smart because we rally back up to the 50s. And then, of course, I missed the whole North American move. But here we have positive commentary from Plosser, who's the Fed chairman, who's the Philly Fed chairman, and he says basically that we may move away from quantitative easing. This is very positive to the dollar, negative to the euro. The euro just completely crunches through the 41 level, all the way down, actually all the way to almost 50. At the end of the North American session. I missed most of this move because, of course, I'm away from the charts. But all of this, I think, is kind of interesting because it shows that within the structure of what I do, it's a much higher probability to trade to the 00 and to the 50 level, and to use, if you're gonna be sort of a fader instead of a flow trader, to use the 50 and the 00 levels as the points of resistance and the points of support when you want to fade the market flow. If you kind of subdivide the structure this way, I think the probabilities would be very much on your side as you go forward. So lastly, I just want to conclude this by last week I showed everybody the equity curve since I started trading on very, very low leverage ideas and on very, very low leverage in the market. And this is the whole equity curve from the start of March. And as you can see, it looks extraordinarily good as we go forward. But what I want to show you is this week's trade. One of the things you see, this is the demarcation of all of the trading up to this week, and this is this week's trading. What you can see here is, so I picked up almost, I guess, 1.5%, right? About 5.5% to 7% for the end of the month. But look at, just the key thing is, look at the tightness of this curve, and more importantly, as you can see, this is an enormous amount of dots here. There's a tremendous amount of trades, but the trades are actually tiny. This is the critical thing. My drawdowns here are tiny because my trades are tiny. And that, I think, is the final thing that I want to leave everybody with as the lesson for Scalping University. It's not enough just to have a good setup. It's not enough just to trade the higher probability ideas. It is probably much more important to trade them all with very, very low leverage so that you can continuously control your risk. Now, I'll be the first one to admit that I've been just on fire for the last week and a half. I've really been reading the market very well, and clearly this cannot last forever, and clearly there's been a huge element of luck. But there's also been a very good element of risk control, and that is the final lesson I want to leave everybody with on the Scalping University series. It's not enough to be right in the market. It's much more important to control your risk by trading small, small, and smaller. I'm wishing you the best of luck, the best of trading, new ideas next week at BK, and new ideas on YouTube. And as always, follow me on Twitter at FXFlow, and I'll see you there. Boris Schlossberg, over and out.